While we were still on the second transaction, we were looking at trading stock. It says that our physical stock take revealed that we had 902,000 worth of trading stock, but our records show that we still have 955. Means there's a deficit. It's either that it was stored or it has gone obsolete. So now what we have to do is record a trading stock deficit, which is the amount that we thought we had less the amount that we now have, and we have a deficit of 52,000 in trading stock. That's a substantial amount. Next, we have directors' fees of 22,500 outstanding at the end of the financial period. What does that mean? It means that we still have to pay the director 22,000. Means that we have to increase by 22,500, giving us a total amount of that 840 plus 22, giving it 862. Next, it says we have to make a provision for outstanding interest on a fixed deposit. This investment has been in existence for the entire year and interest is not capitalized. What does this actually mean? This line item actually means that we have interest that is still due to us that we have not received as of yet from our fixed deposit. And how do we get that amount? You will have to go to our fixed deposit of 495,000, and it accumulates 8% per annum. And we were told that we've had this investment for the entire year, so we can actually capitalize the full 12 months of interest. Now we can calculate that by saying what is 8% of 495,000? That gives us 39,600. Now we were supposed to get 39,600 rands worth of interest, but we've only received 26,630. Means that the difference is still receivable. The difference between the total less that amount and 12,970 worth of interest is still receivable. But we're not going to take this one away. So our total is in essence supposed to be just the 39. It's supposed to be this amount. That's the total amount of interest income that we're supposed to have. And in getting that, we're supposed to say 26,630 plus the difference of these two. So 39,600 less 26,630. And that difference is the one that you add onto the 26,630 to give you 39,600. Moving on, we have a debtor who owes us 32,000 that has been declared insolvent. His estate paid 40 cents in every rand and this has been correctly recorded, so we don't have to deal with that 40 cents. The remaining balance must be written off as irrecoverable. So we have to increase our bad debts. Our bad debts there, 12,000. We have to increase them, but 40 cents have been paid. So what we are owed is 60%. So we're gonna take 40 cents as 40%, but they still owe us 60% of 32,000. That gives us 19,200, and our total will be the two combined, giving us 31,200. Moving on, we have provision for bad debts must be adjusted to 5% of debtors. Okay, so that alone is not enough. We need to find out what has been done before. I have to go back to this balance sheet. Provision for bad debts. It's 18,000. So we are not told if it's 5% or it's 3% or whatever percentage, but it is of our debtors. And our debtors control has 396,000 in it. Now take note, it still includes the debtor that has been declared insolvent. So we have to decrease this 396,000, sorry. So in here in our calculation, we'll just firstly say 396,000 less the person was owing us 32,000. So our debtors control is now 364,000. But then now, what is 5% of that? We need 5% of our debtors now. And that gives us 18,200. And previously our provision was just 18,000. What does that mean? It has been increased. Now, if your thought was that what we just did is incorrect, then you are correct, because not 100% of the debt actually went bad. So in essence, we are supposed to have subtracted the portion that went bad, and he has paid 40%. So it means 60% of this debt actually went bad. So we need 60% of 32 of 32,000. And that gives us 376,000. So when we redo this, it means our provision comes to 18,840. And previously, as I've shown you, it was at 18,000. Means that it has increased by how much? 840. That's not difficult to include there. Okay. Moving on, the rent included 14,520 for July 2011, adjust accordingly. Now we are at 30 June 2011, not July 2011, means that our rent includes income received in advance. So what we have to do is say our rental income less our interest received in advance of 14,520. That gives us rental income of 162,360. And then we're told that make provision for depreciation as follows. Vehicles at 15% per annum on cost price, equipment at 10% per annum on the diminishing balance method. New equipment to the value of 48,000 was purchased on 1 September 2010. This has been correctly recorded. Okay, so let's deal with our depreciation. We firstly have a vehicle cost. Let me just increase this. Vehicles, it's 15% per annum on the cost price. That should be relatively easy to account for. Our cost price is 814. $814,000, and it's, so we've had our vehicles for a full 12 months and we didn't dispose of any. It's 15%. So I'm gonna need 15. I need 15% of that. And that gives me, let me put my brackets. Okay, I'm gonna have to remove this V. It's disturbing my formula. So it's 112, 100. What I'm gonna do, I'm just gonna include that for now, 122, 100, and I'm gonna calculate the one for equipment now. Now equipment is on the diminishing balance method and it's at 10% per annum. What are we told about equipment? We have equipment of 616,000 and we bought additional equipment of 48,000, but this was recorded correctly, so it means that this has been included here. But we now need depreciation and we have new equipment, and in order to get new depreciation or the depreciation for the new equipment, we'll have to take a different way. So what we are going to do is firstly remove the amount for that new equipment, which is 48,000. Let me just double check. Yes, it's 48,000. So, and that'll give me 568,000, means that was our original equipment that we've had the whole year, and it's on the diminishing balance, so we have to remove this 341. So still remove the 341,000. That gives me 227 on the carrying amount, and it said that it is 10% per annum. Let me just confirm. Yes, it's 10% per annum, meaning that 10% of 227,000 plus I need 10% of this 220. Let me just write it there. 227,000. Close my brackets. I need plus. Okay, let me put my equal to sign. There we go. So we currently have 144,000. But that's not all. We still have to account for this. So I'm going to do the 48,000. 48. We bought this on September the 1st. And our year end of 2010. So it's 1st September of 2010. Our year end is 30 June of 2011. How many months do we have? It's September, October, November, December, January, February, March, April, May, June. So it's only 10 months. So we can only depreciate that 48,000 for 10 out of 12 months. Here's the formula here. And I'm going to put my equal sign. But that's not all. I need my 10% for the depreciation. So multiply that all by 10%. And that gives me 4,000. So up here, I still need to add 4,000. That gives me 148,800. Okay, moving on. We have the final adjustment, which tells us that we have a loan statement received from Joy Bank on 30 June 2011, which reflects the following. The balance at the beginning of the financial year end. Let's just confirm this balance. Let's look at our loan. Mortgage loan. It's 804. It is not 1 million. So I'm guessing this is for another loan. We have repayments that we've made of 458,000, and we have interest capitalized. We do not have that line item. Balance at the year end is 804,500. And we are told here on the side note is that the total interest forms part of the repayment during the year. Capitalized means the interest is added onto the loan. You need to calculate this figure. So we're told that the total interest forms part of the repayment. So this repayment includes interest. So I'm just checking here if I have my interest. I think I forgot to put my line item for interest expense. I'll just include that briefly here. So I'll just have my interest expense line item there. And we do not have interest expense. So just briefly, what we are going to do is actually work backwards to get this amount. So 804,500 is equal to the balance at the beginning less the 458 plus the interest. So the interest is capitalized. So what we are going to do is to say we're going to have to work backwards. So we're going to have to be, so we're going to say 804,500 less, this was added, so we're going to less 458, 1, 2, 3. This was added plus 1,125,000. Moment and think about it. If your answer is you think this is incorrect, then you are correct. It is actually supposed to be, change these signs, make this a plus, make that a minus. And we get 137,500. That means that is my interest.